Okay, guys, January 7th to 14 p.m. Central Time, and we are trying to get into a gold setup live right now. And let's see the situation. So, we are on futures desk right now and taking 5 contracts. Let me show you what we are trying to do. The gold has been bouncing around and it has been on a downtrend. You see, we're trying to catch a move. So, right now, the area of confluence is it's already up towards Fibonacci halfway down, but we feel the trend is changing. And why we feel it's changing is you see it kind of tried breaking in the structure, right? Many times. Failed, failed here. But this time it kind of broke the structure. For the first time, it broke the last lows. It fell back and now it's trying to retrace. So we feel where can it go up to. That's the challenge. Okay, so this was the logic overall, and now let's see on a smaller scale what's going on.
Order field.
And we are trying to see here a head and shoulder being formed. Now head and shoulder is a very complicated pattern. What we feel sometimes it doesn't act and give us the similar results, now let's see. We saw this was the head of the shoulder, and this was the geometry of the structure. It came to this point, and we formulated this line. Okay, and we are calling this as a yellow line, first line. Let's say orange line, and then there was another tab. Normally, we say the longest tab is the head. So we said that the head came to this point. Okay. Now, if head came to this point, then the last small one was the shoulder. And normally we see the shoulder most of the time break the neckline. This was the neckline, so I'm calling this a red neckline. And let's make it look like a neckline. So this neckline was broken, okay? And then we feel this was the retest dot. Now this can be a misguiding dot, but we have entered here and we have taken stop loss because there was a big wick formed here. And if we use the head and shoulder tool, the other neckline white one which I just deleted, that was the one they gave, but we felt this is not the right neckline. Neckline was here, so we are going with the risk reward. And again, I have taken a big position which is to the point of adjustment. I am using micro gold. So Arandara looks like it's going in the right direction. Now, if we remove this, what's the second logic? The second logic has been the retracement went with the broke of structure. And normally people say normally you should take this as the profit target because this is where it came last point. But we are trying to see something else as well, that this is the distance traveled, right? Sometime it happens, sometime it doesn't. And we see if this is going to be till this point, we feel this is where it should go to. Now, on an overall level, this would be a very stretch Fibonacci, very stretch Fibonacci, because this is going up to 786 zone. And normally anything that goes up to 786 zone is a huge change of structure. So we are sinking on an overall level. Has gold been in an area? Because yesterday we took a big short sell, and alhamdulillah we were there, traveled to, but then this is like a bounce, and this bounce is more like from this point. So if I delete everything and if I remove all the indicators, I feel this jump was a big structure point. Let's see if this structure point is withholding anything. Because yesterday we tried making up a geometry. In the geometry, I have to see our trading view, but I think it was something like this. Then we took something like this. And now looks like it is something like this. So it's a Fibonacci level elevation actually. Gold is again has been in a bull rally and is again going to a bull rally. So again, going back to where we were, this was the head and shoulders, and we assumed no, not this. See, again, we are making it's so confusing because normally the best head and shoulders is it should break the neckline, which it is doing, but it should also be it should also be connected to all three head and shoulders. So if you use the head and shoulder tool itself, see, just try to see the neckline. It will give you this neckline, what we are forming, right? And this is breaking the structure. And so this is the correct neckline, correct. And let's see, we are trying to lower our stop loss. And normally here what we are trying to see, our profit target is high on a higher side, because if we are taking a $210 stop loss, it's just better we were there. Because normally what retailers try to do is they try to keep a stop loss which is tight, just take a little bit more room and get into the second level of stop loss. Okay. And sorry, I have to adjust my camera. What's going on? Because I'm using the standing table, so okay. So this is okay. Instead of this stop loss, we are taking this stop loss. And here, if we try to take a retracement, we saw that the retracement came to this point. And this is a fib extension. But till here, there would be no risk reward actually. Just we are going right now bluntly on a 1 is to 2. Okay. We're trying to lose one $500 and we're trying to make 1,100. So we will just stay in that range. because sometimes when you try to become too greedy, you lose the game. Right? We don't want to lose the game. And the second big stop was this head. If we go to this head, we are still in 1 is to 1.6, which is still not bad. Because, see, the thing is, it's already stretched to this point. And yesterday we took a sell trade on a long time frame. So if this has been stretching already, and we see the last candle was also comparatively not a bigger bull candle, so we should be keeping in mind that this is a retracement on the negative side of the trend. So we are in the sell trend and we are buying it. So you have to not be very much expecting risk reward ratio. Okay? And you are in sync with it, then you can expect that. So right now we are not in sync because overall structure of gold is sell, but we are buying. So okay, and we are back up with the we'll just try to see candle by candle. We are back in a 1 minute candle. We'll just try to see if we can get at least 1 is to 2, but be vigilant. The head of the shoulder is here. This is not bad. If on the opposite side of the trend we get this as well, I'm happy. And I'm keeping not the stop loss here because see, if I keep it here, then it's a good 1 is to 2. It's more than 1 is to 2 risk reward because you lose 236 to make 708. Not bad. But just as a matter of fact, if any case there is a big wick, I'm keeping a stop loss a leg behind. So if you guys enter with one position size, two size, three size, you don't have to enter at seven because this is where your risk management goes bad. And let's see, we are back in a little bit profit, and I'm saying hopefully this can. So you see, this is a perfect. Now, what looks good in book doesn't look good normally in the real life, but this is a perfect, they say, butterfly structure where you see left head, right head. There is an angle which is touched here. So left head is getting breaking the neckline. That's number one. Right leg is here, number two. And see, it's going back here. It's going back here. And if we were here, stop loss, the spread cost would have taken us out. Yeah, if it falls down, if it does not respect, it has already been retraced and it was retraced till here, then we missed it. But this was a very little profit for a very big risk. So normally we assume this should, because see, this is actually correct. So let's see. On a bigger geometry, yesterday we predicted here and it fell down till this point. This was a good, in a slightly bigger time frame. I'm trying to calculate what was the retracement size. If this was the retracement size, then I can have a room to here. So guys, what I'm doing is I'm kind of going greedy, and I can be wrong, but I'm trying to aim for 1:4 risk reward ratio now. If I lose $429. I get it. Still, I'm in $23 profit. You guys want to stop out, you can. But I feel when I'm in the trade, I will let it retrace to this point, and inshallah, it will retrace to the point. I assume at least 7 and 6 on an overall fib level from which it dropped, and then it has to drop. It should drop back here, like it came like this. Now it went this, and then it will fell down. But we are taking this ride, this aeroplane on the north side direction. Okay, so you guys want to do 1-to-1 risk reward ratio, you guys can. You guys want to do, but since I'm already in the trade and I'm positive right now, and we have seen sometimes that if you don't book small profit in big greeds, you can lose. But then again, you have to keep in mind that you have to have a set target, right? So for that set target, let's say in this future desk account, if you take 100,000 account, you have a $6,000 profit target. So you have to make it also, right? And then if you lose $1,200. That's the max. So I'm trying to lose 439 for it. Yesterday I blew the account. Yes, due to big position size on that. So when you play with your own money, the strategy is different. When you play with the, because the problem with funded account is you don't have the swing trade option, you have the day trade option. So you have to, let's say right now it's 2:31. You maximum have 1 hour for the trade to complete, right? Now, hopefully this might come to this point, right? Instead of here. So I have to close the trade here. But if it's my own money at stake, I can keep it on for 2 days, 3 days, swing trade. That's not a problem. So two strategies. I do both the strategies, but since I'm working here on a funded model, and most of you asked if I can help you clear that, that's why I'm trying to limit my trading strategy based on that. So based on funded, considering market will close 3:30, we will try to see, since it's 1 hour left, we will try to stick to a small head and shoulder pattern. We hope by this time, at least, let's say it's 1 hour left. What's the speed of it? This distance was covered in 1 hour. So we assume this distance can also be covered in 1 hour if it has to go 56 minutes. And we are back positive, alhamdulillah. You can see this is a retracement. Now see one thing. If our stop loss would have been here, we still saved, right? Because it was still here. But if this would have been a big wick, then you could have been stopped out and trade went back as per the evaluation. So that's why better to keep your stop losses one step lower, everything. So good luck, guys. We are profitable, alhamdulillah. And it's going actually, it's chasing up the target. I think it's listening to us. So, alhamdulillah, God is kind. And let it close. And let it close. It should take time, about an hour, so we cannot stay live for an hour. And good luck, guys. That's the setup. That's the trade. That's the logic. Everything is there. Hope this helps you. Remember it first.